Real estate marketing is one of the most popular and expansive marketing at this time in this world. Many real estate investing platforms are present for beginners in 2022. If you want to start with a minimum investment threshold for real estate, so you can get started with little money as $100, and the highest investment in this platform is above $5,000. The management fee is a modest 1% asset fee, but it's worth it considering how easy it is to get started. Did you know that the short-term rental market has now increased past a $1.2 trillion valuation? Please subscribe to our channel Rugged Capitalist, like, share, comment, and press the bell icon button for more new and quick notifications. But today, increased housing costs all around. Home prices were up 18.7% from Q1 of 2021 to the first quarter of 2022, according to the latest Federal Housing Finance Agency, FHFA, House Price Index report. Higher mortgage rates added to the cost of buying a home, as they rose sharply in March and April. Nadia Evangela, the senior economist for the National Association of Realtors, says rates should average around 5.7% by late 2022. But these higher costs are putting pressure on the housing market. The Mortgage Bankers Association, MBA, recently reported that a steep decrease in mortgage applications to buy and refinance pushed the market index down to its lowest level in 22 years. So why will home prices continue to rise in 2022? The fundamental supply and demand imbalance in the housing market has caused most experts to forecast higher home prices throughout the rest of the year. According to economists, predicts prices will move up in 2022 by 10.8%, but they also forecast a significant cool down in 2023, with prices climbing just 3.2%. Citing strong fundamentals such as scarce inventory and shifting housing preferences as the reason for the double-digit home price appreciation over the last couple of years. With rates rising, money isn't as cheap as it was a few months ago, which might sideline investment activity, a move that could help some buyers gain footing. We will see a customary drop in home prices as investors begin to leave the market, says Yatin Karnik, founder of Confer, a company that helps residential homebuyers find affordable mortgages. However, many prospective homebuyers will still find the cost of a mortgage unaffordable at these prices. Don't assume you can't buy real estate just because home prices are high. Investing in real estate has some significant perks. It can provide passive income, serve as a hedge against inflation, and help you to diversify your portfolio. But if you've been watching the housing market for the past few years and haven't invested yet, you may fear you've missed the boat. Property prices have skyrocketed. And while mortgage rates hit record lows during the pandemic, rates are now up considerably. With concerns about a housing bubble and interest rates expected to keep rising, you may fear that it's too late to get started. The reality, however, is that there are 3 great reasons you shouldn't shy away from a real estate just because you believe the optimum time to invest has passed. Number 1. There are always opportunities for savvy investors. Real estate is a really broad category of investments. It doesn't just refer to buying residential single-family or multifamily homes. If you're reluctant to buy these types of properties because you feel like the market has peaked, you could explore many other options, such as buying real estate investment trusts, REITs, focusing on industrial real estate, or purchasing virtual land in the metaverse. Rather than sitting on the sidelines, take the time to look into the opportunities that still exist right now. This way, you can immediately diversify your portfolio beyond the stock market. Since there's been a lot of volatility in stock prices recently and the threat of a potential recession could cause even more havoc, you could end up very glad that you own some of these other assets. 2. Predicting what will happen in the real estate market can be a challenge. Although there are certainly some indicators suggesting that it's not an optimum time to borrow money to buy residential properties, the reality is that no one can predict what's going to happen with 100% accuracy. After all, when the country entered lockdown and unemployment surged at the start of the pandemic, few people would have anticipated that home prices would skyrocket over the next 2 years. If you're waiting for the perfect time to start investing in real estate, you could miss out on lots of opportunities in the long run, and you may never actually end up getting your money into this asset class because the ideal moment may never come. 3. Real estate is a long-term investment. Ideally, if you're interested in gaining exposure to real estate, you'll want to purchase assets that you're going to hold for the long term. This is the best strategy for most types of real estate investing, except for more high-risk strategies such as flipping houses. And, across asset classes, long-term investing is usually the optimum approach. If you're hoping to hold your investments for a long time, it may not matter much if you don't buy at rock bottom. Over decades, you should still see your investment pay off. For all of these reasons, you may want to consider moving forward with adding real estate to your portfolio, after researching all of your options and identifying an approach that works for you. Where to invest $1,000 right now? Before you consider making any real estate investment, you will want to hear this. Our team of real estate experts and analysts at The Motley Fool just revealed what they believe are the top 5 best REITs under $49 for individual investors right now, and they're giving the report away for free. Over the last 20 or so years, REITs have consistently outperformed the regular stock market. And with the recent release of our top 5 favorite REIT investments right now, we believe it's an ideal time to get invested. Today, many resources are available to teach about real estate online and offline platforms like Arrival Homes, Ground Floor, and Streetwise. It's very helpful for beginners. They offer people to build a self-future in real estate. The most important feature based on which we can distinguish real estate to take their investment motive. All investors buy their real estate. However, not all of them do for the same reasons. Let's see 3 major categories of investors. Number 1. Speculators. Most of these speculators are either people trying to make a quick buck by selling their phony surefire real estate profit strategy, or people who have fallen prey to these con men and are trying these phony strategies in the market. Number 2. End users. Usually, people who buy real estate are buying their own homes. They have the intention of staying in the house for decades. Number 3. Long-term investors. Like the flippers, these people too invest in the real estate market to make money. However, the decisions are not short-term. Long-term investors divide into 2 categories: active investors and passive investors. Active investor. Actively involved in the property management process and may visit the property several times. Passive investors. They do not take interest in managing its day-to-day affairs. So, they either hire employees or end up hiring professionals. Low inventory, fervid competition, and massive price gains have battered buyers since 2020, but now rapidly rising mortgage rates are making it even harder to purchase an affordable home. For many buyers, higher mortgage rates mean they can no longer afford homes in specific price ranges. The problem is that even modest single-family homes cost as much as lavish pads did a few years ago, so buyers are stuck either waiting for more inventory to come online or moving to a more affordable area. And there are many more who are hoping prices will drop, but that might not happen anytime soon. If you're waiting for prices to suddenly plummet to what they were in the past, you're making a mistake, says Tabitha Matsara, Director of Operations at Mortgage Bank of California. The Fed has promised another interest rate boost. If you're ready to buy, don't wait, because prices aren't headed dramatically downwards to what our parents paid. No cliff dives are going to happen. Today advice. Money uses for life and enjoys your life. Why do you save your money to spend your life? Poor people always sleep after eating something, but why they are not sleeping without eating? Because one power of the world controls all these functions. And why you compete with nature. Thank you for keep watching and support.